Hello, traders. It's 8 a.m. Chicago time on Thursday, the 21st of November, 2019. This is episode number 1644. Thanks for joining me again today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Market stance currently is super mixed. Crude has popped back up, has taken back the sell-off from a couple days ago, and is holding steady at the composite point of control around 57.20 or so. And currently trading at 57.53. But we're getting a mixed bag here. The DAX is the laggard today, down 33.5 points, along with gold. Gold's at $1,470. But also the bonds are off 12 ticks. The Euro stocks are off. The Bund is off. The 10 years are off. The Dow is just up 5 ticks, which is about less than half a rotation. The S&P's up 3 ticks. So you get the point. It is a mixed bag, looking like a resting day today unless we get some sort of news. So that's the market stance coming in. In terms of scheduled releases this morning, pretty busy morning, lots of releases from Europe. We did get the initial jobless claims, a little weaker, 227,000 versus 219 expected. Continuing claims also higher at 1.695 million, above the 1.689 million expected. Philly Fed came out at 10.4, stronger than 6.8 expected. We do get consumer confidence at 10 Eastern, half hour after the open. At the same time, we get existing home sales from the U.S. and the CB leading index. We get Fed's Kashkari at 10.10. And then we have the Treasury auction for an 8-week bills, and then a 10-year tip auction at 1 o'clock. So nothing really incredibly major here. Inflation rate out of Japan at 6:30 p.m. Eastern U.S. time. Overall, these numbers haven't been moving anything. What's been moving things is this TV reality TV drama that we call the current presidency and the current trade war, and it's being played by both sides, back and forth, back and forth. It's almost like a tug of war, and the stock market is the rope. One side pulls, the other side pulls back, and so on and so forth. But we're still near all-time highs in the S&Ps. The all-time highs in the futures are 31.28, and currently we're trading at 31.10, 9.5 really. So we're not far from all-time highs. So the effect really hasn't been all that much over the swing. But on a day-to-day basis, as you saw yesterday, we saw a 25-point drop in a matter of minutes. Just on the announcement that was made yesterday. So, which was, of course, refuted. So that resulted in a pullback, a good portion of the way, about 7 points short of where it started. So, this is an environment to stick to your stops, really important. And to the bigger thing here, and I've talked about this extensively, the big thing in this kind of environment is to let go of the losers. Let them go. Love them and let them go. It's just, you cannot be concerned about the loss and how it happened and how could it be and, oh my God, I'm a terrible trader. That whole conversation is absolutely and positively costing you twice as much as your P&L. When in this environment, we've just got to let go of that last trade because the next one is right around the corner. It's kind of like missing a tennis serve and sitting there lamenting how you missed it, and there's a serve coming just as fast right after it. The idea is to let the first one go, focus on the next immediately. So that's the environment we're in. So we've gone over the what's expected. Here's where we are in terms of what was expected yesterday. Let's follow the green scenario one. Scenario one, what a beauty. Almost to the tick on the top and bottom. Of course, that is not my goal. My goal is not to be right here. But the reason I point that out is despite the craziness of the news and stuff, yesterday was actually a really nice auction. I love when the market accelerates, because when it accelerates to many people, it is it seems to look like chaos, volatility, fear. But to someone who's been watching the market for a while, and many of you have, it looks like an auction that is working properly, that is testing key areas and so on. So what are the key areas yesterday? 31, 18, 19, if you recall, everything from 16 upwards is considered 16 through about 21 is considered heavy resistance given where we were opening, and the expectation is that it would roll over into 3109.50, chop around a little bit, get down into 3104, 3105, chop around a little bit, get down into 3100, chop around a little bit, and then get down into 97.5, chop around a little bit, and then 9150 is the key target. You see it right here, and I put it in there just as a reminder. 97.50, 91.50, key areas below, with 18.19 really a key resistance zone. It's the MC point of control from the last few days, this black line right here. And you can see it outlined right there, the POC. That area is expected to be quite resistant, still is. And then the 91.50 comes to us from the MC point of control below. So we filled the gap that we left behind last Friday, went right to 91.50. I think we pushed through by 3 ticks and turned back around. Here's what we got. This seems a little noisy. But really, well, let's look at it on the 15 because there's just too much going on there. Here's the 15. Opens up in an open auction. Where does it go? It goes to 18.50. I took, it had to, this short had to have 2 stabs, and it took forever. Look at this, about an hour and a half sitting before the news fall, and then news comes in and it explodes right through the various areas, and it gets down to where? 90.75. Remember this price. 91.50, that's the MC point of control, the volume, the microcomposite volume point of control. Remember, we build those around areas of balance. Let me scrunch this down so you can see where that's from. So this is the high volume area left behind from all of this balance here. This area here, we went right through it by 2 ticks. 3 ticks, and we bounced right back up to 3110, 3111, being a clear low volume node, the key low volume node. Notice that the point of control did not shift down. We have a double distribution, elongated profile, lots of price discovery yesterday, and the market is right here in the low volume node of yesterday. Very, very important area to watch. Up to 31.13. Keep an eye on 31.13 today. It is the price that is likely to indicate whether or not we hold prices lower or we climb back over a wall of worries and get back into 31.19, 31.20, and then resume our balance up top. And in that case, we would push right up in here. So given the point of control up here, 31.19, this is the price you want to watch. So 31.13 If it gets 31.13 taken care of, then look for 31.19 to be touched this morning. Beyond there, we're looking at 31.23. Remember, I outlined these prices yesterday. I put a line at 31.23 right in here somewhere. Beautiful. And then I put a line right in here at 31.19. Then there was a line at 30, and there was a line at 31.05 or so, and then 97 in here somewhere. And then the big target is 91.5. That's what we're looking at in terms of zones. Boop. There are the stock zones. My lines are a little crooked versus the stock zones themselves. So that's what we would be looking for. Again, the scenario. If it pushes through this 13, then we're likely to get 19. If it takes out the 19, we are likely to get 23, 23.5 as the next key area up, and then beyond there, all-time highs. And if it doesn't take 13, then it's likely to roll over to 05, likely to push down 3,100 to 97, and again, 91.50 brings us back into balance. So we're in a very, very clearly defined risk-reward area. Volume profilers are likely to want to be active in this area because the risk reward on these setups is very favorable. We don't get that in this market. We don't get those opportunities very often. I'm not eliciting you to trade. This is not a trade recommendation. I'm simply saying the way the market has been trading gives us a little, the structure is quite clear and very, very traditional in nature. We don't see that very often. It is tainted by the news, but the news just makes things move a little faster. Okay, so that's the review of yesterday. Scenario one, as you see, spot on. We don't always get that, but that's how it was yesterday. The overnight session reopens down below, reopens in a gap down, and then after a test of 30.91 and a quarter, no surprise there, we push back up through, consolidate quite a bit, but what we have in the overnight session is an upward skew. An upward skew to the action. What is going on here? An upward skew to the action so far. Anyway, you know what I mean. Just a channel that looks something like this. The price discovery at the top looks to me to be incomplete. The point of control is around the mid and VWAP below at 31.02 or so. And the overnight volume is exceptional, 408,000 contracts. There's a lot of activity overnight, so we have a lot of price discovery, and most of the overnight inventory is short on price, slightly long to flat on delta. So on the open, expecting a little bit of chop as it likely will pull back to 31.06, 31.05, but overall it seems incomplete at the top. That's what I'm seeing. Let's take a walk over to ctbookmap.pro to look at the heat map overnight. Let's scroll back and look at what happened here. So there's the reopen, and then here's the new session. We go into a gap, we test down, and we get an impulse higher overnight as the Chinese say that they're still seeking a phase one deal, and then it goes completely sideways. Nice little collision here. Collision zone there, 31.08. Keep an eye on that price because of the collision. And then here we are stuck in this area now. It's just sitting sideways. Liquidity at 31.16. 31.15, 16 above there. Remember our levels, our key zones. Let me scroll this a little bit further. Remember our key zones, 31.19 key area, 13 is a key area, and we have some liquidity in the 14 to 16 zone, all above. A lot of liquidity above. I'm expecting the market is likely to continue to ride higher and move towards that liquidity. And then below, we have liquidity in that 91.50 area. Again, clear above at 24. That's a stock zone for me, and clear in this current zone at 31.11. So as we push higher here, we expect it to run into a little bit of overhead resistance, but overall, ultimately, I'm expecting it to squeeze through. Yes, why would I expect it to squeeze through? I expect it to squeeze through because I'm reading what's on the screen. I'm reading the auction. What the market has done is it's fallen through the low of the auction and has rejected these prices. Boom. So they said, we don't want to be back at this composite zone. We want to be back in this composite zone. And that's why I expect it to continue exploring. It did a good job of checking what's beneath, and now it's higher, right? So that's how things are showing up this morning. What the market does, it does. I'm going to bug you again, as I have been for the last week now, to take the time and fill out this petition. This morning, Anthony Crudelli got a hold of me. He actually interviewed one of the people at CME, Derek Seman, who looks at this, global head of commodities, who looks at this. And they discussed the micro crude contract. If you fill out this petition here, ft71.com/MCL, I'm putting it in the chat box on Twitter. It is also in the video description. You can click on it there. Please take 30 seconds to fill this out. They're saying they're studying the matter of releasing a micro crude. It is really important that this product gets released because it gives us some diversification away from the micros, which are all index based. Please take a moment to sign this. I want to get this done just like we got the micro indices done. Okay, so it's the next step, and it's what helps traders last long while they learn in a live market and to get away from never-ending simulator type of trading. This morning, the primary scenario, we are opening in range against the low volume node. I expect the market to be attracted a little bit to the downside, but I expect it to impulse through 13, get above 13, and squeeze into the 1920, and then consolidate here for a while before it begins to drift up into 23. And potentially all-time highs. This morning, again, the reason for this is because the market has tested lower and found buyers. A clear indication. It's the old probe and turn type of trade. The secondary is a push higher into the 31.15.16. Consolidate, push the 1920 into 23, then impulse down and go sideways for a higher high, higher low, and a rest day. That is the second play. Assuming no news, those are the high probability plays for the day. There are always five scenarios. And I'm only going to outline the key trades of the day, and that's them right there. It's 8:20 Chicago time, 10 minutes to the cash open. Good luck. Make sure you've identified what your risk is for the day. Don't be a gambler, be a trader. Good luck, and I'll catch you tomorrow morning. Reminder that a week from today is Thanksgiving. Next week is a holiday week. Expect the volume to be anemic and expect the trade to be a little more choppy with Thursday being a holiday. It's Thanksgiving in the U.S. next Thursday. I'll be here pretty much every day that the market is open. Good luck. Don't forget to fill out the petition. Take care.